Hi, this is Brad Wolff, and this is the end of day Emini review. Coming into today, as you can see on the chart above, today was an outside down day that had a weak reversal up. Here was yesterday's high, the market went above it, sold off below yesterday's low, and reversed up in a fairly weak manner. On the open, the day gapped up, had a fairly large gap, and went sideways for several bars. The bulls continued to get strong buying pressure here, all the way down here, and even here. However, the bears ended up getting a small pullback bear trend here, and the market broke to the downside. Because of all the trading range price action in the reasonable buy signals here and here, even though this one didn't trigger, bulls would be buying these lows. And because of that, they'd be willing to scale in lower, such as above a bull bar, like here. That increased the odds that the market would continue and form a trading range later in the day. So, trading range, bear breakout, another trading range here, which led to the market going sideways. You can see it was reasonable to buy here, double bottom here and here. However, this buy was closing in the middle of the day's range, so not ideal. This sell here and this buy here were not ideal because they were coming after a fairly tight channel down and a fairly tight channel up, forcing traders to buy at extremes or sell at extremes. Traders that bought here, if they were not quick to get out here or here, they would get out below this bar. A bull that bought here, betting on a breakout pullback buy, would probably get out below this bar, even though this is not an ideal buy. It's a swing buy. Bears can sell here, betting on a triple top or double top, and a triple top here. You can also call it a double top breakout pullback, which is also a triangle. Bears could sell here. They could also sell here. And not many bears would be willing to sell below this bar because it's at the low here, and it's at the moving average. Bulls might buy here, second entry buy here and here. Failed breakout below a double bottom. Here's the failed breakout. Here's the double bottom. The bulls that bought here would likely get out below the II pattern. The bulls had a strong breakout and then consecutive inside bars. That is not ideal for a breakout. Therefore, bulls bought, disappointed, a lot would get out. The bears that sold would likely hold short above this bar. Some bears would sell below here, which is kind of the apex of a triangle. If they sold here and sold more below here, arguably they would not get out above this bull bar here because it did not trigger. Bears would be willing to get out above this bar. However, again, this did not trigger either. And some bears would get out above here. Bears might sell below this bar. If they did, they'd probably get out here. Those bears that got out above this bar would get out below this bar. Here, strong enough breakout, sell to close. Traders would sell below it. They'd sell below here. Would they sell this close? Probably not. Most traders would exit, betting on two legs up, and they would sell the low two. It's a low two, even though this bar didn't trigger. The bears that did sell here and didn't scalp out would get out above this bar. Aggressive bulls would buy, betting on a double bottom and a test back into this area, which was also 4,000. Bulls would buy above here, or they could wait for two legs down and buy the higher low major trend reversal. The bulls that bought the higher low major trend reversal would likely exit below here. Test of the wedge top. 1, 2, 3. Test of this double bottom. Breakout point here. Reasonable to exit. At that point, most traders should stop trading for the day. The single biggest thing to remember on a day like today is when you have a lot of trading range price action for half the day and you finally get a breakout up or down, in this case down, the odds favor a lot of trading range price action later on. So even though you had a breakout, the breakout was brief and the market continued to form a trading range. If you liked this video, please consider going to the brookstradingcourse.com website where you can see more information on blog posts as well as learn more about the trading course. If you would like to listen to trading room commentary, please go to the brookspriceaction.com website where you can discover more information about the trading room as well as sign up for a free trial. Thank you.